Hello, and welcome, traders. It is 5:19, so it's been a while since I was able to do a video. I caught a viral infection, actually a bacterial infection, on a business trip to New York City, and it's been weeks before I've been able to actually talk, and even still, I'm struggling with it now. But I wanted to get a video out today. I will hopefully get back on the regular course this week. It's been a really busy traveling time for me. Been fairly sick, having a very tough time actually being able to talk. But accounts are doing great, trades are doing great. I want to give you an update of where we are, give you some trade ideas, hopefully be able to help you out, but really share where we are on things, where I am on some trades. Having a great couple weeks, but really with the markets rallying 20, 25%, what have you, after off the bottoms, off the lows of this, kind of V pullback and recovery, you should be doing well, right? We should all be doing really, really well. And we are. So it's been perfect. We're back up to levels that we probably should have been at all along, except for the crazy, as Tom Lee puts it, the rage selling at the bottom there. And some of that caught us. Some of it's caught some of you as well. But hopefully you've been actually putting money back in on this recovery. And if you have, you've been doing really, really well. And we had a really excellent week again last week. I'll go through some of those trades and what we've been doing and what we've been seeing in the markets. But overall, it's been a great couple of weeks for us, dating back all the way till the beginning of April. We've had one, two, three, four, five, 6 straight great weeks of trading. On a whole, we have put in over $21,000 in realized gains in just the last 6 weeks alone. So trading is going excellent for us. Love the positioning that we're in. So let's talk about it. Let's look at where the markets are right now, and I'm definitely going to get into the trades that we're in and what's really working excellent for us. And I've really wanted to get a lot of discretionary trades in because it's just been such a good market environment to be in. You got to make hay when you have the opportunity to do so. And before we start on that, let me address what was happening over the weekend here with the Moody's downgrading that U.S. credit rating. We talked about to the members here, and I put out a little bit of an article or note about it that there was the 4 reasons that Moody's did this. Number one, rising government debt, huge increase in the government debt. Uh, it's projected to rise, what, 98 to 98%, or from 98% of GDP in 2024 to over 130, almost 134% by 2035. Absolutely ridiculous. The US government is insane. They have no caps on their spending. They're just putting this country more and more in debt. I'm not going to get super political, although I guess that was political enough for you. Okay. Congress sucks. Okay. Bottom line, they got to put something in place to balance the budget, and none of the presidents have been able to do this up until this point. Another reason for Moody's is persistent fiscal deficits. Okay. Our deficit is expected to widen from 6.4% in 2024 to almost 9% in 2035, mainly interest rate payments, more entitlement spending, lower revenue generation. Fiscal deficit sucks. Again, Congress sucks. Most of the presidents have sucked. Okay, it's a terribly run country at the top end. Okay, has been that way for years and years and years. It's not one party over the other. They both suck. All right. Next is policy uncertainty and proposals. Well, we really don't know about the current fiscal proposals. We don't know about the tax cuts. Are we going to extend those? The Jobs Act? Are we going to add more to the federal deficit over the next decade with some of these um, uncertainties? Who knows? And then the last reason they cited was, shocker, political polarization, ongoing political gridlock and brinksmanship, debt ceilings constantly coming up and being a problem. That's all not great. Again, let me say it one more time in case you missed it. Congress sucks. Okay. These guys couldn't run a business if their life depended on it. You got to run the country like a business. In a business, you, me, anybody, yeah, we run it to make a profit. Okay? We don't run it to make a loss and keep borrowing more and more money. I don't know any businesses that really operate that way and are successful long term. Okay? You got to run, a business to make a profit. You need cash flow, reduce your debt, generate more money for your shareholders, your employees, what have you. All great stuff. This country can't figure it out. Okay. So is it a big deal that we got the downgrade? Well, no. Two other companies had already downgraded the U.S. debt. This is just the third one to fall. Didn't expect this to be much of an event. In fact, I called it kind of a non-event to our members. In fact, my exact words were, I think the reaction will be muted. And that's pretty much it. Exactly what happened. All right, so let's move on from there. It's enough depressing stuff about the fact that this country's run by a bunch of bozos in Congress. They just have no clue. However, our opportunity is to trade around what these other knuckleheads are doing, trade what we see, not what we think or feel here, and use the charts and use our strategies appropriately. So let's get into those. And let me give you some trade ideas and opportunities that are out there. And then I'll share my portfolio with you again, because I haven't done that in a while here. I just want to keep you up to date with where we are. But we're doing extraordinarily well. We have uh, since uh, since April 30th as well. This account has grown, 20, what is it? About almost $20,000, actually a little over $17,000 in the last 3 weeks alone, which is fantastic. And in the 3 weeks before that, we've actually grown another $25,000. So our net lick is definitely up. Certainly, we did take some losses back in the beginning of April. We'll be working those things off. Yep, sucked, and we're working those off, doing pretty well since then. So we'll get it back. Things are going well, and let me share exactly what we're doing. So let's jump into some of the trades and cover what we're doing. All right, let me share my screen. And let's just go through a couple charts for you just to give you some idea of what's going on. And I'm just going to use a daily chart right now. If you're looking at the daily chart here, let's extend this line up a bit more. We've got a couple different support levels here if we do decide to ever pull back. But this market has just been in an absolute tear to the upside, all the way down here off of these lows at 48.36, all the way up to 59.8, over 1,100 points to the upside here. And really the last 1, 2, 3, 4, 5, 6, 7 straight up days since then. Excuse me. I'm going to struggle to make it through, but I'm going to try. All right, so a lot of up days in a row. RSI is now at 73. It is overbought. The MACD starting to roll over a bit. Volume has been pretty much just flat on this more recent roll that we've had in here. We're primed for a pullback. Don't know if we'll break this trend line or not, but if we could pull back at least to the 21 to 50, excuse me again, and bounce, I think that's a great opportunity. A lot of people are waiting for this pullback. It's a pullback people have been waiting for that just hasn't really come. The last time we had this opportunity of this pullback was way back here in April when we dipped to this trend line. And then on April 21st, 22nd, we rebounded and we really haven't had much selling at all. And there's only a couple red days that you can see in here. It's almost all green. Market's not stopping. I would love to see a pullback. We want to get some more opportunity trades. But if you just sit here and wait, you're just missing a massive up move. So what would I be doing here? I'm bullish but cautious. All right. So I'm going to wait and see what happens. We've got a pivot, level here. Can we pull back down to this, bounce off of it, test higher? We're getting very close to the upper Bollinger Band, but it continues to open up, so that's okay. And we're getting close to the 3 ATR level. So otherwise, bullish, but cautious. We're just getting overbought right now. Doesn't mean it's the end of the world. We wait for the pullback, and then I think the next pullback is a great opportunity to get long. Take a quick look at oil. Oil has been in this range now for quite some time. If we're looking at this range in oil, we started here really right around April 4th or so when we entered this, and we've just been trading sideways for the most part. Excuse me. 112s, strangle trades, all good options in oil right now. The overall downtrend is down. So the overall trend on the daily, it is lower. If we take these highs, we bring the trend line down. It's obviously a downtrending line that we're in. Any rallies continue to be sold. Any major sell-offs continue to be bought. I think it's just a good strangle opportunity. RSI is perfectly positioned. We're close to the 50 EMA, the 21 EMA. I think we're really well positioned in oil to just keep putting strangles on. And we've got one running right now in there, as well as some 112 trades, which I think are great because we have no risk to the upside. And if we do pull back again to these levels, which we've bounced off, so we might have a double bottom in, the 112 would catch potentially the trap opportunity on oil as well. So like oil, gold. This has been an excellent, excellent, excellent trade all year long. It's finally, maybe double topped a bit here, pulling back. You got a little bit of a neckline in here around 32.25. If, but we're not breaking it hard, and we came down and we've tested this long uptrend line that we've had since December of last year. We've tested it one, two, three, four, five times. So this is a strong trend line on gold. We've broken the 21. We'll see what happens. I think gold, number one, has set itself up great for a strangle right now. I also think a 112 trade in gold, fantastic trade. Let's see. I'm very bullish on gold. Let's see where we go in the next couple days or so. Moving averages are stacked. I like gold. I like where we are. Bonds have been nothing but a struggle. Bonds have been weak. The trend in bonds has been nothing but down. Interest rates continue to climb. However, hasn't been, I'm not in anything with bonds except in TLT, we have a strangle trade going. So in TLT, we got the strangle trade, but this is a downtrend line. We're back up to it again. Can we break through? Did we find some support? You can draw a trend line kind of right across this bottom line here. Support, 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 support. But you're knocking a door enough, eventually someone's going to let you through it. And we've got this descending triangle. So if we can break 111, that is a serious problem potentially. However, if we break the trend line, I just expect that this range is going to continue on bonds. So we'll see. Excuse me, I apologize. All right, copper. Perfect strangle opportunity, just hugging the 50 and the 21 EMAs here. I think it's a beautiful strangle trade right in the middle of the Bollinger Bands, 3 ATRs. Silver, exactly the same. Beautiful strangle trade if you're moving sideways there. And then if you look at the Aussie dollar, okay, not a bad strangle trade, not the best, but we had our dip, we rallied back up here, and really just held sideways in here. I don't think this is a bad strangle trade either. So there's a bunch of strangle opportunities, and for me, it's the 112 trade, it's the strangles trades. I'm doing poor man's covered calls. We're also doing a couple other spec trade type trades. We are either wheeling, covered strangles is my preferred method of covered calls, or the wheel. I love to use covered strangles. We've been doing that. So lots of different opportunities in here. But strangles is one of my all-time favorites, and I don't think this is a bad setup for strangles. Let's go quickly through just a couple stock charts. Nice pullback on Amazon, pulling back to the 200, maybe trying to hold that while the 50 and the 21 EMA are moving their way higher. It got going a bit. Now it's pulling back. I love Amazon. It's one of my favorite companies of all here. The Death Star here. They're in everything. They're just a category killer for everybody out there. I really love Amazon. And when you look at the overall, let's get rid of the trend line on here. When you look at this overall move to the downside, we've retraced a handful of this. If we actually put the fibs on from top to bottom here, we've already retraced almost to the exact 618 and then failed on it. Does that mean we're rolling all the way back down here? No, but it makes sense that you come up here, you pull back a bit and give it a little bit of time. But I like Amazon. Any pullback here to me is a potential opportunity in Amazon. Nvidia has also recovered nicely off of its lows. There's some definite uptrending lines on this. We've definitely broke the downtrend line. Nvidia, it's approaching its earnings coming up next week. So we got earnings on the horizon. I will expect that earnings should be fairly decent for this name. Maybe a little bit of a run into earnings. You're at the top of the Bollinger Band, 3 ATRs. It's just too lofty. It's overbought. Let's get a pullback and jump in. Hood, one of my absolute favorite stocks right now. We are in this thing in every account that we have in a whole lot of different ways. Mostly covered strangles, sometimes just naked puts, sometimes poor man covered calls. You name it. Either way, I like getting long on Hood here. I think it's a great trade setup. I'd love to see a little bit of a pullback. It's overbought like many other things. I think you wait a little bit here and give it some time. Palantir, same thing. Now, it was overbought and now then pulled back, had a little bit of a rally, now pulling back again, trying to give you an opportunity. It is so overblown here, but it may just stay there forever. The growth prospects are great. The company is really excellent. I love this company. I hate the stock. Okay. I want something a little bit cheaper. I guess I'm willing to miss out on gains that everybody else is getting here, but I just can't bring myself to buy it at 126. I really didn't want to buy it much more than 40 or 50, but I don't think we have a choice. So let's see if we can get some more pullback. It looks like it might be starting to pull back a bit more. Let's see. RSI rolling over, MACD rolling over, and we hit the Bollinger Band. We're starting to roll down. If we break this uptrend line here, that's going to be a good opportunity. I think sell some naked puts down around the 90, 100 range or so in there and see how they fare. And if we get a sign, we get a sign. All right. And then we can wheel from there. All right. Google, another one. Good opportunity down here. I don't love Google, the company, so much, but I do like Google, the stock down here. I think for a trade, coming off of its lows, ascending triangle a bit. If we can break this 168 level here on Google, I think this thing really could pop itself to the upside. You got MACD rising, RSI rising. I like the stock right here as a trade opportunity. Tesla, also good stock. Okay, nice move, overbought. Let's see a little rollover. Let's bring it back down a bit. And if we can get this thing down, maybe somewhere along these lines, down here around this 295, 300 level. I think that's a good opportunity level, which would also be the 200. If we can pull down, bounce that, I think that's a great entry point on Tesla. All right, I'm going to skip most of the others. Excuse me. HIMS, I really like the stock. It's way too overdone. It needs a pullback. When it does, we'll get in. JP Morgan, really love the stock. Love financials in here a bit. I'd like to see this thing, while it's overbought on the RSI, let's pull back, give ourselves some update, some breathing room. Netflix, great company, super opportunity here. Overbought, let's get some pullback. SoFi, this one is a little bit more interesting because now we're coming back down to earth with some trades that maybe make a little bit more sense. Okay. I don't know if this is the greatest trend line because we don't have a lot of touches on it, but pulling back to where we are today, I mean, if you really look at the trend line to here, okay, you snapped it to the downside. If we get any more pullback on SoFi, I love the company, hate the stock. This stock has been stuck. It's sucked for so long. I think it should be significantly higher than it is. Innovative company, good stuff. It can't get out of its own way. Yeah, we ran all the way up to 18. That's it. That's the best this thing can do is muster 18. If not, it hangs down here around this, $10, $9 level. It just can't get going. So putting your entire life savings in here doesn't make any sense to me. But if it gets a little lower, I wouldn't be opposed to jumping back in. All right. And then we're also in Berkshire Hathaway. We know Warren's leaving, but that doesn't really affect me a whole lot here. We've had a nice pullback. RSI is at a good level. MACD is starting to reverse itself. I think this thing is a perfect strangle or covered strangle opportunity. I've been selling in the money covered calls. All right. So there's a handful of potential trade opportunities. Let's get into my account and I will show you exactly what I have been trading, and we can check it out. All right, hang on. Make sure I got the right account selected. There we go. Beautiful. Now let's go. Here is the account. Like I said, it's been doing fantastic. Had a great run with the markets, which again, it should. Here's what we're in live. We've got two different trades on oil right now. We've got a 112 trade. We just closed one. We've got this other 112 trade. It's up 80%. It's in great shape. Here, no sense taking it off. Let's get some more out of it. It still has 28 days to go. Oil's in a perfect position. This thing's in a perfect spot. No sense touching it. Strangle. This strangle's up 4% in just 6 days. Fantastic. Nothing to do here. It's at 61. We've got the 86.44. We're dead in the middle. There's nothing to do here. Great trade. ES, we're just sitting on some long hedges because we've closed out all of the naked puts that we had. So we've closed every naked put from a 112 for a winner here, and we're in really, really, really good shape. We actually just put on uh, another, well, we've got some hedges in here. We just put on the new naked put of a 112 today. Nice 6% up, move up in one day so far. That's the only long or the only short puts we have right now because all the other ones have come off for winners that we've had. So we're back to kind of square one, trying to get trades on, and then I also have a 120-day 6 delta naked put on that we put on this afternoon as well. Gold, here we go. Gold, we're sitting on a 112 trade here. It's up 12%. We got another 112 trade here. That's up 4%. And we've got a gold strangle. It's up 7% in 4 days. I love gold. I love these trade opportunities. We're in great situations. I don't think there's anything to do here. I'd still be doing the same type of trades in gold. All right, Berkshire. We got two trades on in Berkshire Hathaway. Now, one of them we did a covered strangle, but we did an in the money covered strangle, or covered call. I love the in the money covered call. Why? Because I am all about just generating cash flow. This is not about appreciation, generating cash flow on these stocks. So we bought 200 shares, okay, and those shares are down $600, okay. All right, so we're down what, like a buck 50 or something. It doesn't make any sense that we're down only a buck 50 in these shares. This thing has been nothing but a problem on Tasty Trade's platform. Okay, so yes, it's only down from 513 to 512. It's only down $1 times 200 shares, or a buck 50 times 200 shares. Or it should be down 300, but it's showing 600. Totally wrong. Doesn't make any sense. But anyway, the covered calls, we sold deep in the money at 490. I only did this to get the extrinsic value out. Well, there's $56 worth of extrinsic value. Once this thing is valued correctly, if we went to close it, we will make some money. But overall, this trade's actually in good shape. I'm making 520 on the in the money covered call, and I'm really only down 300. on these. And again, it makes no sense. It's the Tasty Trade platform. Something wrong in here, but we're really only down a dollar on the $1.50 on these shares. So we're actually positive 200 some bucks. So we'll have a nice 2% return in around 10 days. So 2% in 10 days on that one. The other one we have is a covered strangle. The way I typically enter covered strangles is I'll sell a put, then I'll sell a put and a call against that. Now, selling the put approximate essentially buying the shares or getting assigned the shares, and then I have the put and call around that to approximate the strangle. So it's technically a covered strangle, even though we don't own the underlying yet. This thing's up fantastic. It's up 76% in 13 days. Nothing to do here. Just two different ways of playing Berkshire. Both of them are great. Hood's our problem child. Why? Well, because we're hitting the top of our strangle on this one. We did not get assigned, so we let that go. We just let the strangle. I'll probably have to make some adjustments here on Hood. Not a big deal. I'm happy with that because I have long Hood shares everywhere except for here. And I should have bought the long shares, and we didn't do the covered strangle with the naked put here. All right, MicroStrategy. MicroStrategy, lots of great trade opportunities here. We did another in the money covered call. So again, we bought 100 shares. Those shares are actually up 600 bucks. And then we sold the calls in the money just to get the extrinsic. We've got $78 worth of extrinsic to go. But overall, this trades up 233 bucks in just 7 days. So again, I'm looking for like 1% in 11, 1.5%, 2% in 11 days, okay, which is a great rate of return. For me, love this. Okay, it'll get called away. We'll make some nice cash. So in 10 days, I expect to make somewhere in the neighborhood of 300 bucks on this. So good trade overall there. And then the equivalent of an in-the-money covered call is also a naked put. So if you don't have the cash to do it, you could just sell the naked put. Well, I did that as well. So we sold a far out of the money naked put. This thing's up nicely. We're already up 42% in 5 days. There's a lot of opportunities here. I think Jade Lizard, inverse Jade Lizard, in the money covered calls, naked puts. I also really like strangles, wide strangles on MicroStrategy or strategy now. Great trade, good opportunity. All right, QQQ, here's our poor man covered calls that we have. We're up on these poor man covered calls. If I can pull it up here and see, I'll let you know where we are. I didn't update today on the table, but if you want, we can take a look at where we are on these covered calls. So understanding this trade so far, okay, we're up almost $6,000 on the leaves. That's great. It's not my goal, but that's fine. We're selling the covered calls pretty much at the money. I'm only trying to get the extrinsic value out of it. There's still quite a ways to go. We still have $300 of extrinsic. So we're going to keep pulling that money out. The value of this right now is 19,627. 19,627. Overall, we're up 20% in 31 days on our QQQs. So 20% in just a month. Not too shabby. We'll take that on the QQQ at the monies. SOXL, that's just a naked put trade. I would love to get assigned and wheel this thing. We'll see what happens. But if not, we just sold the naked puts. We're up 4% in 5 days. We'll take that. Okay, small gain, nothing big there. Let's take a quick look here. TLT, we've got a strangle on 16% in 14 days. No problem there. And then let's wrap up with SPY. So in SPY here, we are in the money by 7 points on our covered calls, but we don't care because all I want is the extrinsic. So I'm waiting for this $538 left of extrinsic to come out of this. The overall long calls are up 64,728. Okay, so 64,728. 728. This trade's up 27% now in 3 months. Okay, so we've made 27% in 3 months. I'll show you how this is working despite losing we're losing overall on covered calls, but we're making the extrinsic every single week on these. And let me just wrap up. We'll show you this particular um, strategy and trade. Here's the SPY trade. Our net cost on it, 47,780. Current value as of a few minutes ago, that I just put it in there while we were talking, 64,728. Okay. We have actually lost almost $4,000 by selling at the money covered calls. And everybody's all, "Oh, Tom, you're losing on the covered calls. You're losing. Oh my goodness, you're losing." Okay, yeah, I've lost $4,000 by selling at the money covered calls, but I keep making the extrinsic value. So the only thing I'm giving up is intrinsic as it goes up, and the underlying is going up more than the covered calls are. So overall, we're up actually $13,000 in 99 days for a return on cash of 27,200. Or I'm sorry, 27,000, 27.2%. Okay. And you can see, yeah, we've won some on the way down. We've lost some on the way up. It's all good because overall, if we close this thing out today, we booked 13 grand in 3 months. Great, great for the account. And then here's that QQQ trade, same type of deal. We've paid 13,780 to get in. It's now worth 19,627. Great timing, by the way. On this trade, we've actually lost $3,000 by selling at the money covered calls, but I've made the extrinsic every single time of $400 to $500. So the only thing I'm losing on is the intrinsic, which has been more than made up by the gain in the longs. So even though we've won, lost, won, lost, we've lost most of the time, but we keep gaining extrinsic value and the longs keep gaining in value. So we're up 20% in just 31 days. We'll take it. Okay, so there's what I'm up to. I wanted to at least share with you guys. It's getting a little dark here in New York. Okay, I wanted to share a little bit about what I'm doing. I made it through with my voice. I don't know if I can do this every single night right now, but I'm going to try to get back to you. We're going to share the trades. If you have questions, drop some comments out there. It's good to be back on with you guys. We're doing fantastic. Members are doing great. Having a lot of fun here. If I could keep my voice and not cough to death and keel over from this bacterial infection I've got, and it's been just killing me for 3 weeks now. So I apologize for not being on. Hope you got some value out of this. If you like it, give me the thumbs up. I could use it right now. And let's get back into it, guys. Stay safe out there. Be good, and we'll talk to you tomorrow. Bye-bye.